Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Friday, November 10th, 2023. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. Before I jump into the charts, I just want to let you know that this week we put out 2 stock picks as usual every week. Nike on Tuesday, Starbucks on Thursday. Both are very relevant trades that are offering opportunity. You can check those out once again with a 5-day free trial by signing up for wickedstocks.com. On with the charts. This is the big picture. I always like to start with the big picture, overall trend dynamics, and work our way into the day itself. Just a reminder that a little over a month ago, we actually closed below this meaningful 10-month channel bottom that is well above the market now at 256.20. That sell signal set up and indicated bearish continuation into the low 180s, the 181.90 descending channel bottom that is based off of that July high. It's about a 4 or 5 month channel structure that remains, a 3 to 5 week objective, possibly over the next 2 to 3 weeks. And with that, I will zoom into the daily chart and show you that it is this descending 1/3 speed line that is based in part on the low from a couple of weeks ago that has performed pretty well this week over the last 5-6 days in containing daily buying pressures. It can, as I've said all along, contain buying on a weekly basis, and below which you can prepare, if you will, for that 181.90 downside target. So holding below 221.42, 181.90 expected over the next 3 to 5 weeks, possibly over the next 2 to 3 weeks. In fact, the channel bottom on the daily chart comes in at 183.13, and you can see that area lower right. 221.42 remains our resistance, able to contain buying through next week, and below which the low 180s remain, I'm just going to say a 2 to 3 week downside objective. Now for the day itself, I've got 201.67, this former 2-week channel top that we gapped above about a week and a half ago, and can still contain daily selling pressure. So this is decent bottom picking territory for day traders. I will say, and I'll move to this chart, that holding below 214.03, which was a 3/8 Fibonacci over the last week or so to the downside, over the last couple of weeks actually to the downside. And I like 214.03 because it lines up pretty well with this low area that played out about 4 or 5 days ago. 214.03, as you can see in the support resistance column, able to contain intraday buying pressures, and below which 201.67 is in reach today, where a daily low can be placed. Now, if we close today below 201.67, we should, Monday, Tuesday of next week, continue south to 191.20. And as I've already said, holding below 221.42 will keep 183.13 in reach over the next 2 to 3 weeks. I'll go out on a limb and say that if we close today below 201.67, we should, by the end of next week or sooner, fall to our objective at 183.13 on the daily chart. Once again, on the weekly chart, 181.90. They are both dropping at a progressive pace. This area in the low 180s able to contain selling through the rest of the year. And so in terms of, the 3 to 5 week swing trade, if you're an options trader, for instance, you may have already reached for, and probably did several days ago when we were testing the speed line, 182, 185, 180 out of the money puts that don't expire for at least, I still would say, at least a couple of months out. This could take longer than 2 or 3 weeks, and you just don't want to see that out of the money put would decay to nothing as the market approaches your objective. And so that is still the play. Now, once again, for day traders, you've got 201.67. That is in reach today below 214.03. 201.67 able to contain session weakness. Possibly a 3 to 5 day bounce back to 221.42. So that is a real possibility here for the 3 to 5 day swing trader, but just know that we remain on our heels into later November and early December below 221.42, still anticipating, that longer term support that we find on the daily chart at 183.13. Closing today below 201.67 once again. We should, by the end of next week, sorry about that, fall down to, wrong chart again, the 183.13 channel bottom. I don't know how else to say that beyond what I've already said. So let's cover the upside today. And not only pushing through 214.03, but also testing 221.42. So if we happen to push or open today above 214.03, 221.42 is in reach today. That speed line able to contain buying through next week, and once again below which we maintain a 2 to 3, 3 to 5 week downside objective in the low 180s and dropping. If we do close today above 221.42, then just the opposite. I would expect meaningful gains as we move, through the rest of November. I would consider this narrowing zone of resistance between 256.20 on that weekly chart and 270.24 on the daily chart as a 3 to 5 week objective. So if you are positioned right now for the 181.90 objective, whatever that means, whether you're short Tesla itself or you own 180 or 185 out of the money puts, if we close today above 221.42, I would strongly recommend liquidating that short position and instead reversing, going long. If you're an options trader, it might mean just buying 265 out of the money calls that don't expire for at least, I would go 2 or 3 months out on that strike price expiration. I don't think it'll take that long. But once again, it could take longer than 2 to 3, 3 to 5 weeks, and you just don't want to see the out-of-the-money call decay to nothing as the market approaches your objective. That 256.20 is shown here on the weekly chart, and on the weekly chart, we also have the channel top that I showed on the daily chart a moment ago at 272.69. This area all comes together into the mid-260s over the next month or so. So on the weekly chart, I have 224.43. I will put that out there. I could have that as a minor point today, but the daily version has been holding nicely, and I will say that merely closing above 221.42, and if you would like to round up the 224.43 as your sort of final buy signal as we move into December trade, that's fine by me. But I'll just go back to closing above 221.42. We have a meaningful buy signal into December. The next 3 to 5 weeks then expected to push on into the mid 260s. Now, if you're kind of a 3 to 5 day swing trader, and if we close above 221.42, you can anticipate 234.26. This could be within 1 or 2 days. Over the next 1 or 2 weeks, 246.68 is a 50% upside retracement. These Fibonacci's are based on the July high against the more recent late October low. But once again, overall, closing above 221.42, it is this channel top at 270.24 that I would consider to be a 3 to 5 week target where we could top out into the first quarter. Once again, 270.24 is dropping and 256.20 is rising. This area all comes together over the next month. Where to leave you? I'm going to leave you with this chart. I think it's the most appropriate for the day. There's really nothing left to say. Please click like, share, subscribe. Check out those stock picks at wickedstocks.com. You won't regret it. I'll be back Sunday afternoon with Monday's Tesla. You have a great weekend.